Hi traders, this is Bernard from Binary Winners Club. I have a special video for you, and this video is about how you can create the best binary option strategy for yourself and use it in 2020 and going forward. You do realize that you need a strategy. You need a way of trading. And I endeavor in this video to show you the things you need to create a powerful strategy that you can use profitably. Without wasting time, let's proceed and look at the elements of a binary option strategy. A binary option strategy must have several elements. The time frame. If you are trading on a candlestick chart, you know that every candle represents a specific time frame. It could be 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, etc. Okay? So you need to know the time frame for your strategy. You also need to know the expiry time, because with binary options, our trade always closes at a specific time. That means if your expiry time is 5 minutes, no matter what you do, your trade will close at exactly the close of 5 minutes. If it's 15 minutes, it will close at 15 minutes. So you need to master the correct time frame and the correct expiry time for your strategy. You need also to test your strategy to see which assets, whether they are currency pairs or commodities that you trade, which assets are applicable. Do remember, there is no binary option strategy that works profitably across all currency pairs or across all assets. Some assets work very well, some assets would lead to losses. So test your strategy across multiple assets and pick those that perform very well on that strategy. You also need to pick the correct markets. If your strategy targets trending markets, then make sure you always apply your strategy in a trending market. Don't try to apply it on a ranging market. It will not give you the results you expect. If your strategy targets ranging markets or flat markets, then don't use a trend following strategy in a ranging market. Always use a ranging strategy for a ranging market. Okay, so be aware that the markets would affect your results. Number of trading opportunities. There are those who don't have enough time, and for that reason, they are interested in number of trades per hour, or number of trades per day, or number of trades per trading session. It should be known in advance that the lower the time frame, the greater the number of opportunities. But of course, subject to the way the strategy has been created. Okay, because a strategy that filters a lot of things might not have a lot of opportunities. Okay, but purely if you're trading price action, naturally you'll have a lot of signals depending on your analysis. Okay, candlestick psychology, that is. But you are trading using indicators and maybe specific chart patterns and things like that, you might have a limited number of trades per hour or per day. So that is subject to your trading personality and style. Okay, if you need many trading opportunities, you need to move down to lower time frames. If you need a few opportunities, you can still trade on lower time frames, but maybe for 1 hour only. Okay, so it's up to you to decide. Okay, but a good strategy will give you a good number of opportunities per day. Personally, my style requires that I do 5 to 10 trades each day. Okay, there are those who want 20 because maybe they are full-time traders and stuff like that, or probably they just enjoy trading a lot. I pick a few setups and I close the day. Okay, win rate. Again, you expect that a good strategy gives you a good win rate. And a good win rate, let us remember that with binary option strategies, depending on the payout from a broker, if the payout's about maybe say 80% or 76% thereabout, then the break-even point is about 56%. That means at 56% win rate, you are not losing money, you are not winning any money, you're not making any profits. Okay, so anything above 56 would be profitable. But for me, a decent strategy would deliver 70% plus winning rate. And a win rate is computed on average, meaning If you do 100 trades, recommended for testing, actually it's 100 trades. If you do 100 trades, you add the number of winning trades and the number of losing trades, your average should be a minimum of 70 winning trades and a minimum, or actually a maximum of 30 losing trades. Okay. Do remember, 65% is still okay, 67% is still okay, or even 60% if you have a large account, but always target at 70% plus. And I want to show you how to arrive at 70% plus win rate in this particular video. So stay with me to the end. Okay. All right. So with your win rate intact, you also need to know that your strategy is easy to use. Okay. Because a strategy could be profitable but difficult to use. You have a lot of conditions to test. That makes it a bit difficult to use. A good strategy would be easy. 2, 3, 4 simple rules, you enter trade. Okay. Not too many indicators, not too many lines on the chart. It should be easy to use. But again, we are different. There are those who prefer having so many indicators, so many lines. But some people prefer cleaner charts. Customizability, my recommendation is always whenever you get a strategy or a trading system or indicator, try to test it and customize it to suit your own trading style. Okay. It might be working on 1 minute, but maybe you're not very comfortable with 1 minute because of speed issues. You try the same strategy on 5 minutes and see whether it delivers results. Or maybe it's a strategy that is based on indicators and you have a bunch of moving averages on the chart and you believe you don't need many of those averages, you just move some of them and remain with the essence, or the basic things that will tell you trend direction, for example. Or maybe you need to be able to remove some things, add some things that will make you feel like you own the strategy. Customizability is the whole aspect of making a strategy for yourself, making it okay for you. Okay. All right, so then we move over from there and look at categories of binary option strategies. There are 3 in my view. Number 1, we have trend following strategies or trend continuation strategies. For these strategies to work, you need a trending market. You have reversal strategies or counter trend strategies, and for these ones, you need a strong support or resistance level, something like that, demand supply areas. You have touch strategies. This could be part of 2 or part of 3. This is where you immediately enter trade the moment price touches a given level. For example, in your mind, you know that you have a very strong support level here. Market was coming down. The moment the market touches this level, you buy a call option or you go higher. Okay, those are touch strategies. Of course, there are even candle close strategies and stuff like that, but I thought I would mention that now let's look at components of a high win rate binary option strategies for 2020, guys. Now, if you need to succeed trading binary options in 2020, then my recommendation is carefully look at this. A good and a successful strategy, especially if you're a price action trader, or at least you combine price action with whatever indicators you have. Number 1, always include support and resistance areas or levels. Okay, no matter what strategy you use, support and resistance will increase your win ratio. Number 2, candlestick patterns. Okay, candlestick patterns like engulfing patterns or pin bars or inside bars or dojis, those are powerful signals. We use them to enter the trade. We use them to decide whether we are continuing the trend or we are reversing. Okay, this is where you study candlestick psychology. Trend filters. Okay, now you are trading in the direction of the trend. If you are a trend following person, trend following trader, then you should be able to identify the direction of the trend. That means if you are in an uptrend, you buy calls only or you do high options. If you are in a downtrend, you are doing lower options or you are doing puts only. That's how you follow a trend, of course, at pullback levels, okay, or at momentum stages. Now, the first one is important, the second one is important, the third one is important, the fourth one is critical. Very important. Okay? Now, after considering support and resistance, candlestick patterns and trends, so assume you have an uptrend, price is coming to a support level, and you have a bullish engulfing candlestick pattern, you still don't enter trade immediately. Okay? There are 3 things you need to check first before you enter trade. Number one, price rejection. Was the support level rejected? Okay, to confirm that buyers are there. Number two, was there a breakout of the level? Because if price breaks the level, then you might consider whether it's a fake out or it is a true breakout. And then you decide accordingly. You also need to consider that once there is a breakout or a reversal candlestick pattern has formed, like bullish engulfing, evening star, morning star, etc., price usually, yes, over 50% of the time or around 50% of the time, price will usually retrace. Price usually retraces. Okay? And if you check it carefully, you'll see that quite frequently, sometimes up to 70%, depending on time frames. Price retraces. So you need to consider retracements, breakouts, and price rejections. Lastly, number 5, you need to also consider confluences. Don't just trade because of those main, of course, this and this and this and this would give you about, 70% plus or 80% win rate, even 90%, okay? But it's important also just to add confluences like a trend line, Fibonacci's, volume, Bollinger Bands, round numbers, okay? Round numbers, those are very important. A good example is maybe you have a support level here, okay? All right? Use an arrow. This is also a round number area, okay? So if price is coming down to this level, then you can at least believe or have confidence that this is a strong level because it has the standard support resistance. It also has a random number, not a random number, a round number, a psychological number, okay? Or maybe if this wasn't the case, then maybe this was the lower Bollinger Band, or maybe it was Fibonacci 50, okay? Or there was an uptrend line going this way. So this is the intersection between your support level and a trend line. All right, so that gives you more confidence that price is likely to change direction. That's the meaning of confluences. And if you have all these 5 things, guys, there is no reason why you should not score at least 70% win rate. Okay, so let's look at how to build your own strategy step by step. Number 1, pick a blank chart like this, a blank chart. Add support and resistance levels. I have done that. If you look at what's happening on the chart, price stopped going up, moved down, reached here, stopped going down, moved up. All right, reached here, stopped for a while, broke through it, stopped, went down, stopped here, stopped here, stopped here, okay, false breakout, stopped here, stopped there, reversed from all those are reversal points. Okay, so if you consider that this is resistance. From this point to this point is resistance because price could not break above that level. It always went down whenever it went there. All right. Multiple rejections, resistance level. Now these are very powerful resistance or support level. I call it a powerful level. Why? It is both a resistance. On the left is a resistance. Once it was broken, it was respected as what? Support, support. Broken again, respected. You see, with the rejection. Similarly, down here, we have a level, rejected a few times as resistance, broken, respected as support, false breakout, respected as support again and again. And we also have another level up there as resistance, all right? So you have added your levels, all right? That is support and resistance. These are actually zones. As you can see, I'm using that. Then from there, you identify a trend. So you need to know, like here, the market's in a short downtrend, short uptrend, short downtrend, short uptrend, these small swings, downtrend, and it's trying to move back up. This could be a retracement of the long downtrend over there. If you look at the entire chart, it might look like a minor uptrend. If you look at left to right, it's a minor uptrend. It's not a strong uptrend, but actually this is a ranging market in essence, okay? So either way, always remember, now that price is here, you came from a downtrend. So assume that the sellers are strong and you look towards selling if price came to this level. Okay. So let's pick some signals. Let's pick some trades from this chart. Now, this is where I mentioned you need candlestick psychology. You need candlestick patterns. You need to consider breakouts, retracements, rejections, all of those. For example, if you look at here, this is both a rejection and a candlestick pattern, which is what? a shooting star. A shooting star at resistance is a potential sign that the market would reverse downwards. And you see the candle closed in the zone, did not break above the zone. So I would enter a lower option. This candle stopped inside the zone with a long wick down there, confirming that possibly buyers are here. Okay, so you can trade up. This was a breakout. The candle broke through the level. So you don't trade in a case like this. You wait for other actions. The candle closed right in the zone. You could trade lower. Right in the zone, trade lower. Don't take more than 2 trades on a support level or on a resistance level. It will be broken. The level will be broken. So this is enough. It was broken here, now acting as resistance. 1, 2, stop. Because beyond that, the market is likely to break, right? You come here, you see some dodges, and this is another shooting star, and the market went down. Here, market didn't close in the level. I would assume entering a trade. Market closes in the level, I enter trade. Market breaks out, fake breakout. So I don't still enter trade here because I wait to see what happens next. This is a trade. Market closes in the zone. Too far from the zone. The candle is not even in the zone, so don't enter trade. Breakout. Closes in the zone, I would enter trade there. Closes in the zone, you enter another trade. If you consider this, you lose. If you lose, are welcome as a trader. Another close in the zone, and you enter. Now here we are using closing prices in the zones or at the zones. But now if you look at it, you also notice that we have candlestick patterns you would have considered. Like now we already saw this a pin bar at the top, or a shooting star as you call it. A shooting star combined with this, look at it, this is an evening star. Combined this alone, this is bearish engulfing, actually an outside bar, depending on how you look at it, whether it's from Forex or a binary options world, right? If you look at what is here, these two would be bullish engulfing. But if you look at it again, considering these 3, this could be what? Some sort of a morning star or a three bar reversal pattern. Again, considering that there was a week before, confirming rejection, another rejection, close inside, and bullish engulfing, confirming that the market really wants to move up. There was a breakout with a long rejection of the level that was broken, now acting as resistance, right? Even rejection by this bearish candle, bullish candle, that would have also given you a signal. Here is a bullish candlestick pattern. This could be a three bar reversal. It could also be considered as a bullish engulfing, not strictly for binary, but probably for Forex. But again, this is not a good signal because price closed close to the resistance level. So don't enter a setup like that. All right. So generally, you would want to avoid some of the setups. For example, let me show you a setup you need to avoid. Setups you need to avoid. You have, look at this. Yeah, bearish engulfing, but look at the candle. Started from resistance, touched support. So you cannot enter put here because price is likely to bounce off support and start moving up. Because at support, you expect price to move up. At resistance, you expect price to move down. This is a better signal. There's space towards the top. This is even a better signal. Much better. The best, perhaps, if you compare the 3. There is enough room for price to move up. Okay? Even if you are to consider this week as a potential level, from here, you can see that you can have 3, 4, 5 candles going into that direction. Okay? So guys, these are some of the things you need to do. Remember, we are looking at rejections by wicks. We are looking at where the price closes. We are looking at candlestick patterns. We are looking at retracements. Like I show you, there was a retracement here. All right? There is a breakout and a retracement, for example. Let me show you another example of retracements. Let me show you. This is a good example here. There is this level, dark cloud cover with a retracement. Okay. And which other do we have? Even here, after this bullish engulfing, there was a retracement before price could continue. Okay. So always consider those things in your strategy and decide whether you enter after retracement or you enter based on rejections or you enter based on breakouts. You fine-tune your strategy for those particular price action signals. So what must you avoid? Number 1, avoid choppy markets. Choppy markets are those where the market is spiking up and down, up and down, up and down. Yeah, long weeks, all right? So in a choppy market, you cannot even identify proper support and resistance levels. If you are struggling to find support or resistance levels, you are probably in a choppy market or a spiky market. Avoid trading in that market. Number two, avoid slow markets. Slow markets are those that you can enter 10 trades and maybe 4 of them are ATM. The market starts and stops in the same place. Okay. Overextended markets, if you see a market that is strongly moving up, you never know whether it's tired or something, so you might want to avoid such markets. Always trade on healthy trends. Healthy trends are those, let me show you. Healthy trends are those, let's assume this is a support level. There are markets that would move like this, move up, move down a little bit, move up again, move down a little bit, move up, move down a little bit, okay? For an uptrend. And in that case, you would very easily start seeing your support levels, broken, this is broken, this resistance broken becomes support, resistance broken becomes support. So that's a very good, a healthy market. But if you have a very strong trend, you're not likely to even support, to identify support and resistance, because it doesn't even retrace much, okay? Just keeps on going, keeps on going, keeps on going. So you might even look to the left, there's no price action, and so you cannot even identify a resistance so that you can, consider where to take a trade from, okay? All right, so then we look at another thing you need to consider: markets with tiny candles. If you see very small candles, dojis, spinning tops, high wave candles, yeah, try to avoid, or maybe markets with long wicks, up and down, avoid such markets. Markets with huge, sorry for this, just ignore this. I meant markets with what? Huge candles. If you see some strange candles, yeah, a normal candle would be something like this, body size, roughly, okay? But if you start seeing candles like this, candles like this, candles like this, well, get scared and avoid trading, because you don't know what's happening in the market. There could be a lot of either, if it's not news, something is causing that level of volatility, okay, and you may not know. So leave the markets alone. Don't also trade when we have economic news releases, okay? Whenever you have news about a given asset like USD, you Americans are, the US is announcing something that affects USD, the USD pairs will go crazy. USD CHF would go crazy, AUD USD would go crazy. So don't trade 30 minutes before economic news releases and 30 minutes after economic news releases, and that is, I'm talking about high and medium impact news, okay? Avoid such. That's how you can stay above 70. Lastly, don't trade in markets that are not meant for your strategy. If you created a trend following strategy, don't use it in a ranging market. If you created a range trading strategy, don't use it in a trending market. That's what I mean by that particular point. Guys, if you are able to follow these tips, what to avoid, and if you are able to also follow these tips, the components of a high win rate binary option strategy, I guarantee you stay above 70% win rate. So what's the way forward? You go out there and create your own strategy. Create your own strategy. I've shown you how to do it. The things that you need to put there is your business. Go in the market, search for what you need to know. Learn, take courses, learn how to do these things, okay? You can read what to find online. You can take a course from one of the pro traders. I also offer courses in our Binary Winners Club Academy or BWC Academy. There are ebooks you can read, but I can tell you, if you read books, you are going to spend a lot of time. Take a course or sit on the chat and look at what's happening, and you might come across something that will be effective for you. If not, use a strategy or an indicator or a trading system that has been tested and has been used by a pro trader and is being recommended to you, okay? So those are the two ways: create your own, or use what has been used by, or what is being used by pro traders, okay? People who are profitable already. Whichever way, always demo trade. Demo trade every strategy, demo trade every indicator, demo trade every expert advisor, demo trade every robot, everything. Demo trade before you go live. Your money is important to you. Don't lose it carelessly. Regardless, always customize your strategy. Get an indicator, get a trading system, get a strategy, customize it. For example, you might have taken a course where you learn you can trade pin bars, you can trade engulfing patterns, you can trade shooting stars, you can trade morning stars, evening stars, you can trade inside bars, etc. Yeah, marubozu candles, etc. Don't trade all of them at once. Just study them and look at what is okay for you, what you're comfortable with. Maybe you're okay with engulfing patterns. Study, master them, trade them alone. Maybe later on when you have enough time and maybe you have interest, study another pattern. Don't try to master everything at once. Just pick one, feel comfortable with it, use it. If you have an indicator-based system where you have a bunch of indicators that tell you trend, and when you study those indicators, you realize they are simply saying the same thing. For example, some traders are crazy enough. They put stochastic and RSI on the same chart. Stochastic measures momentum, RSI measures momentum, and you wonder why both are there. And maybe to make it worse, they can even add, Williams percentage. They can even add, MACD. They are all measuring pretty much the same thing. So to customize a system like that, you can do away with one or two. At least don't have duplicate things, right? Don't have a lot of duplicate things. Now, some of you would say maybe to make your signal stronger, perhaps. But if they are cluttering your chart, don't just keep them, okay? All right, so then from there, attend classes if you can, learn how to trade, and hit the road. Start trading. Now, are you ready to proceed? If you're ready to proceed, my request is proceed over to the description section below this video. There's a description section below this video. Find a list of our recommended brokers, top brokers for binary options. Okay? Even if you have one broker, I'd recommend add another broker. Don't put all your resources in one basket. Don't put all your eggs in what? One basket. Spread your risks. Have at least two brokers. In case something goes wrong with one broker, you have another broker to use. That's why I have a list of 3 recommended brokers that I personally use. And in case you don't use them, my suggestion then would be go ahead and register with one of them. It's up to you. If you want to, do it. If you don't, it's still okay. But I like spreading my risks, and that's why I have those 3 brokers, and I recommend them to you. In case you have a question, guys, write to me, binarywinnersclub@gmail.com. binarywinnersclub@gmail.com. You would find the details in the description section of this video or below this video as well. And other contacts, you would find them there. Our links to Facebook, our links to Telegram, even YouTube, our Facebook page, you would find them right in the description section below this video. So talk to us. In case you enjoyed this video, put a comment and say you enjoyed it. You like it? Like it. Click the thumbs up, okay? You want your friends to know what you have learned and maybe enjoy the same content? Share the video, okay? Recommend it to your friends. Share our channel, subscribe, and support us. And that brings us to the end of this video about how to create a powerful strategy for your trading in 2020. Thank you for being with me until this moment. See you in the next video. Cheers.